Hello everyone, welcome back to my channel. This is cutkarrot. I wanted to show off a strategy that I'm doing. Now before I begin, just let everyone know that I am not a licensed broker or investor. I am just doing this for entertainment and showing what I do. So I just want to bring that out. So on my Robinhood right now is that I have put 8 shares in Realty Income. Now I'm going to continuously put money into it every day. Preferably get a share into it as much as I can. Right now I've got 8 shares. So my goal is to get to 225 shares of this stock, and that will make it to the point where each month I'll be getting 1 share added to it each month. So it's going to be dripped back in. So it's going to be dividend reinvestment portfolio. So, and I'm going to show you everything, how I'm going to do that and what I'm doing. So if I take O and bring it here, I can see that my yield is 5.75%. My monthly is 27 cents. So if you times that by 225 shares, it's about $60 a share. So if I take that number and I look at it as this amount, I take 537. It's actually more on this end, so let's go to the actual price. We times that by 225 shares. We're at $12,701. Okay. What we can do is we can go into this website. It's called dripcalc.com. And then what we can do is we can put ticker symbol O, and then make sure we change this to 45. We know that our dividend payment is 0.27. Our dividend growth, remember, it was higher, so it was 5.75, so we have to change that. It pays out monthly. Let's just say we just paid the $12,701. So it's going to continuously reinvest, and it will be back in the drip. All right, so we change this to 20 years. We calculate that. You can see it slowly starts to build, and at 20 years, it's way high, more than what we invested. So each year, it's going to continuously build up. So right now we have 225 shares at the this price. At the end of the year, we would have 238 shares. We would have $13,687. At the end of the next year, we would have 253 shares, and it will slowly start to build. Once we get past the 10-year mark, that's when it starts jumping. It goes even higher and higher. And then after 20 years, we have 1,185 shares at a price of per share at 78 cents for our dividends. Now we can stop the drip and then just pocket or put that into our account. Now this amount is going to be taxed, so you have to be aware of that. So if I take that number with this number, and so we got 1,185 times that by 0.78. We get a total of each month of $924 a month for free, forever and ever. And then as of course, it's going to get taxed. So that's how dividend reinvestment or the drip works, how dividends work. Instead of looking at your share price and it's constantly going up or going down or sideways or circles, we don't care about what the stock is doing. We care about what the dividends are doing for us and what's going to be paying me. So this is my price of what I put into it, as well as share prices that it keeps on going up on. So that's why I decide to be a dividend investor and do it this way. Now, if you want to be part of Robinhood, the information for my referral is in the description below. If you do your sign up and use that link, you'll get a free stock through Robinhood, and you can just use that money to reinvest in or do your dividends with. So you can get, I think it's $5 up to $200. So it depends on which one you grab. But you can reinvest any amount. The more that you put in, the more you're gonna get. So be consistent on it and just don't give up. Like, you'll see some months where you're gonna be like for example, if I go to my all, I'm down. But I mean, at one point before I started taking everything out, I was up in 2020. But see how I'm down, and then I've dropped more. But I'm going to continuously reinvest, and then you'll start seeing this number just go this way. So it'll be falling with the stock. So if the stock is going up, I'm going to go up. If my money that the stock is giving me as a dividend, it's going to cause my portfolio to rise. So I'm going to be putting money into multiple different accounts. I'm going to start here, and then I'm going to start putting in other stocks as well. I've got monthly stocks here, and I've got my quarters down here. So I'm going to start putting in a lot. This one right here really makes no sense to me. And remember, these numbers are not guaranteed. The stock prices can be changed in any way. So let's say, for example, this one here, PBA. All right. So if we put in PBA, the dividend share for this one is at 15.69%. That's how much it's growing each year. So let's check that price on our dividends. There it is. That's PBA. So it's actually growing 5.46%. So if we go back here, we're going to change this number to the right number. So what was it? 5.46. 5.46. And we look at monthly 71 cents. Is that right? No, it says 51 cents. So it's 71 cents. We're going to change this to, say, 100 shares. So we're actually making $71 every quarter. We're going to take this out because we're not going to reinvest. It's just going to let it do it itself. We're going to change this to 20. There we go. All right, so you see it slowly move, and then out of nowhere, it just skyrockets. So this is what compound reinvestment will do for you. So we started at we would start at 100. At the end of the year, we would have 8, then 16, 26, and so forth, all the way up to 1,163. And our price per payout will be $1.95. So I'm guessing if you can do your math, it's faster than me. 163 times $1.95. That's $2,267 each quarter. So that's every 4 months. That price will change, or it could change. So it could go higher, it could be lower. I mean, it just depends. So that's what the benefit of being a dividend investor is, besides being just a stock investor. You can, as a stock investor, you're just waiting for the stock to rise, just like Bitcoin. You can put your money into it and then wait till it hits 1 million and wait for it, or it may never hit 1 million. We've been saying that it's going to hit 1 million for the last 4 years, and it still hasn't hit 1 million. But you can do dividend investments and just let it build itself. You want to stick with a platform that's covered by insurance, and Robinhood does have their own safety net, so that if case this crashes, you still can get all your money back or shares. But it just, the price of the stocks themselves, if they drop, we can't stop that. But at the same time, if you want to build your retirement, build a income in the future where you can just enjoy life. You can change this number up as much as you want. So if you're in your 20s and you want to wait or come back to this in 40 years, 40 years you'll be at 32 million, and invested you would have 761,000 shares. And so I guess this price would be a lot higher unless it stayed at this price. If it stayed here, even at that price, you're at a lot. So that's the benefit of um, dividends. Let's see what O would do if you did 40 years. No. Now, if you put in money into it each month, week, daily, you can change this around. Say like weekly, if you put in a certain amount, you can put that in. So, I mean, you can put $1, $5, as long as it's consistent. That's what's going to build you. So let's change this to 40 years. And so you see, after like the 1 year to the 40. So this is the 20. So we're at 1,189 shares. And then 40 years, we would have 40,575 shares at a $2.39 per share, and that's per month. So what is that number? That's a good question. You guys probably already know that number. Let's see. 40,575 times 2.39 equals 96,000 a month. Yeah, I wish I started doing this when I was in my 20s. But anywho, if you guys want to get involved in this, link up with the referral on the bottom for Robinhood. Keep an eye on my giveaways every Friday. I've got one going on today. It ends today at 11:59. But I got more shorts coming out. I got more rips for cards. But I want to do this as a video for everyone to show everyone how you can invest and how I do my my portfolio on which stocks I'm going to go with. So this is what I'm doing, and this is how I do it. And this is where I guesstimate how much I'm going to make on my stocks and where I'm going. So each one of these stocks that I chose are continuously growing. They're not just stopping and just falling apart. Some of them are just moving sideways and not going anywhere. But I know that, like say for PBA, let it load. Here we go. So my all, see how it's just staying in the same location. It's not gone anywhere in the last 15 years. It has been the same area for this amount of time. That tells me that the stock will stay here for another 15 years. So it may not ever go up. So that's the reason why I say these prices don't really mean anything for me, because I don't care where the stock goes. As long as it's still active and it's still paying me dividends, I don't care which way it moves. It can just stay the same. So just keep that in mind. Keep that. Keep doing your research. Know what you want to put your money into. The best investment to put into would be for your retirement. So a Roth IRA. I don't have anything in it right now, but I will be putting money into it, because this is they don't take taxes out. So this will build up for you, and you can build up a percentage. If you're a gold member, you get 3% with gold, so that's an additional 3% each time. So let this build up as well, and you can do a max. I believe it's 7,500 right now. So I think it's more if you're over 50. But yeah, if you want to build up for your retirement, a Roth IRA is like having a 401k. It just builds for you, and it's when you pull money out, it's not going to be taxed. So there's more information about Roth IRAs, and do your research. So don't just go by my words, go by what your research goes by. So if you guys have any questions, leave comments in below. And yeah, that's oh, and the last thing I do want to mention, I do get comments about why am I not going with really big yield companies is because they're a risk. Let me show you something really quick before I let everyone go. Let's go with DX. I think that's the one I saw. Yeah, so DX is a negative stock. So it means that the growth rate of the stock is dropping. So let's say we invested 100 shares. We did nothing with the stock, okay? And then we calculate it. See how the graph is not going up a lot? It's actually just staying near this area because the share itself. Okay, wait. Let's do 20 years. We did 10 years again. There we go. So this is what we invested. So we're investing here. Now the stock is just falling down. It's falling apart. So we put in our 1400. The first year we're at 1500. The second year we're at 1600, and then it barely moves. And then out of nowhere we start losing money. So it hit our high at 257, and then right at 12 years and 13 years we're down and we start losing money. Not only that, we're only making a penny per per monthly. So this 438 shares that we've invested in getting this is now only worth $4.38 a month. Yeah, that's the reason why I would not put anything into something that has a high risk, because the high risk has a low return, and that's what you do not want to get yourself into. Having something with a low risk is going to be more beneficial for you in the future. Like companies have been in business for decades. For one, let's say Home Depot. This is a quarter stock. See how their growth rate is super high? Let's make sure that is correct. Let's go back to our dividend.com, put in HD. All right, so they have a 2.67% dividend yield. So that's per year. So let's go back here. So we know this is actually, what was it? I'm sorry, 2.67. Okay, 2.67%. Share growth, we don't like this. We don't care about the growth of the share. I mean, if we do, if we like had money into it. But let's say we had 100 shares. That's $34,410. Make sure our quarterly is correct. So let's go back here. It's at $2.30 per quarter. That's correct. So we're getting $23 per quarter. Let's take out this. I'm going to make this 20. See how it just, like, our investment here has gone up, but this is how much we're getting on our dividend. So after 20 years, we would have 125 shares. So we gained 25 shares from our original investments, as well as the amount of money we've already put in. We would already been up $532,000 that we would have invested into this company, and our dividend for this would be at $3.79. So, I mean, you guys can guess how much that would be that you're gaining per. This is annual. This is what you gain. If you divide that by 4, that's what you would be getting. So this is how you reinvest. This is how you invest your money the right way. This is what the billionaires are doing. This is the rich are doing. This is how we should be doing it, and how we should build our income to the point where we can be financially free in the next 20 years. So this is what I'm doing. I'm gonna give you guys updates on it every Friday. That's what I'm thinking about doing. Or I can just do it every month when I get paid on my monthlies until I start putting my quarters in, and then I'll show you guys my portfolio on how much I'm making from each one of the stocks, and I'll put that on a side calculation. So if you guys have any questions, leave the comments, like the video, and please subscribe to my channel for more updates. So hit that notification for more updates and more videos. Thanks for watching. I'll see you guys on the next one. Peace out.